Hi everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into Rex American Resources Corporation's latest proxy statement, and let me tell you, it's not quite as exciting as finding an extra French fry at the bottom of your fast food bag, but it's got some interesting tidbits. We'll be looking at everything from who's on the board to how much they're getting paid. This report is basically a roadmap for the company's annual meeting. It tells shareholders what they'll be voting on and gives them some background info so they can make informed decisions. It covers things like electing directors, executive compensation, and appointing the accounting firm that checks the company's numbers. Think of it as your cheat sheet for the company's yearly shareholder powwow. Let's talk about the folks running the show, the board of directors. 9 directors are up for election, and they'll serve until the next annual meeting. This document lists all the nominees, giving a little background on each of them, their qualifications and their experience. You'll see names like Stuart Rose, who's the executive chairman, and Zafar Rizvi, the chief executive officer. It's important to have a diverse set of skills and experiences on the board. This document even has a matrix showing how each director brings something different to the table, whether it's executive leadership, financial expertise, legal knowledge, or entrepreneurial experience. They believe this ensures they can govern effectively, like a well-oiled machine where each part is there for a reason. The board needs to be independent, meaning they don't have any close ties to the company that could cloud their judgment. The company uses guidelines to determine who is considered independent. They make sure that these people are not employed by the company, don't have any family ties, and don't receive too much compensation besides their director fees. The lead director, David Harris, has some additional responsibilities such as leading meetings where the executive chairman isn't around and acting as a go-between for the independent directors and the chairman. The audit committee helps the board keep an eye on financial, legal, and regulatory risks. They get regular reports from management about specific risks and how they're being managed. The overall goal is to make sure that the company is following the rules and that its financial information is accurate. The compensation committee decides how much the CEO gets paid. They also make recommendations about pay packages for other top executives, plus manage the company's stock plans. Now for the juicy part, executive compensation, the company's goals are to keep their top people motivated, tie pay to performance, and reward executives for increasing shareholder value. So what are the key pieces of the puzzle? Base salary, which reflects the responsibilities and experience of the individual. Then there's the annual incentive program, which rewards executives for corporate performance and profitability. Finally, there's the annual incentive program, which rewards executives for corporate performance and profitability. Finally, there's the long-term incentive program, which encourages them to create shareholder value over the long haul. In 2024, the base salaries for the CEO, CFO, and executive chairman were $200,000 and $200,000, $300,000 respectively. These base salaries haven't changed from the previous year. The company also has an annual incentive program. The awards are a percentage of the company's adjusted net income. For 2024, Zafar Rizvi got around $4 million, Douglas Bragman around $2 million, and Stuart Rose around $2.2 million under this bonus program. It's worth noting that a quarter of this incentive was paid out in restricted stock, which vests over 3 years. It makes sure these executives have skin in the game. The company also granted performance-based long-term incentive awards to the CEO and CFO. These awards were based on the company's total shareholder return, or TSR, compared to the Russell 2000 index. If the company did well compared to the index, the executives would get more shares. Based on the results, Mr. Rizvi received almost 67,000 fully vested shares, and Mr. Bugman received about 33,000 shares. The executives also have employment agreements that spell out what happens if they're terminated or if there's a change in control. If they're terminated without cause or leave for good reason after a change in control, they're entitled to a payout, basically a safety net if things don't go as planned. This table shows us at a glance what each executive made for a few years. We can see salaries, stock awards, and those all-important non-equity incentive plan compensation, their bonuses. So you can quickly compare how their pay has changed over time. It's pretty interesting to see how stock values greatly contribute to compensation. So if you believe that the stock will go up, you also believe that these top employees will get rewarded for that with your support. It shows the potential payouts that executives could receive under the annual incentive program. It gives you an idea of the range of possible rewards based on performance, and we can see that the number of shares is not determined until the date of distribution. This table details the equity awards that haven't yet vested for each executive, as it is a snapshot of what happens at the end of the year. This tells us how much unvested stock each executive has, its market value, and any unearned shares they might be entitled to. There's also a clawback policy, which means the company can take back incentive compensation from executives if there's a financial restatement due to misconduct, regardless of the employee was responsible for the error that led to the restatement. This keeps executives honest, knowing they have to give the money back. When deciding how much to pay their executives, the company looks at what similar companies are paying. These companies that the firm looks at are in similar industries as them. Some of these companies that it considers are Ametis, Green Plains, and Berry Corporation. Non-employee directors get paid an annual retainer, reimbursement for travel, and an extra retainer if they serve on a committee. They also get a yearly grant of restricted stock. This table summarizes how much stock has been issued, how much is still available, and the average price that has been paid for the stock. It's a good way to see how the company is managing its equity. We can see how the CEO's pay stacks up against the average employee. In 2024, the CEO made 60 times more than the median employee. This pay ratio is based on the CEO's total compensation compared to what the typical employee makes. We can see what adjustments were made from the original numbers to how much people actually got paid. This happens with things like stock valuations and company performance. At the end of the day, it's about aligning pay with how well the company is doing. Shareholders are being asked to vote on a few things. Electing the board of directors to run the company for the next year, giving an advisory vote on executive compensation. It's a thumbs up or thumbs down on how they're paying the top people, and ratifying the appointment of the accounting firm that checks the company's books. The company discloses any potential conflicts of interest or related party transactions. For example, they mention payments to a law firm where one of the directors is a partner. These things are done to make sure everything's above board and fair to the company. Now, what's my take on all this? Rex American Resources seems to be sailing along in a fairly steady direction. The company's focus on linking executive pay to performance metrics like adjusted net income seems like a reasonable effort to align management's interests with those of the shareholders. One thing that stood out was the clawback policy, which is a good safety net to ensure accountability. However, like any company, Rex faces risks. Commodity prices can be unpredictable, which impacts their business. Also, the regulatory landscape for renewable fuels and carbon sequestration is always changing, which brings some uncertainty. Overall, Rex seems to be managing things well, but it's important to keep an eye on those external factors that could impact their business. Also, the regulatory landscape for renewable fuels and carbon sequestration is always changing, which brings some uncertainty. Overall, Rex seems to be managing things well, but it's important to keep an eye on those external factors that could impact their business. Yeah. Thanks for watching. If you enjoyed, please subscribe, like, and comment.